Jim was a young man of few words, but with a mathematical talent that bordered on the supernatural. His university years were spent submerged in the vast oceans of number theory, cryptography, and game theory, while his peers joined clubs and chased internships. He was busy dissecting complex formulas and pushing the limits of algorithms. After graduation, as everyone else flocked to traditional finance and tech giants, he found himself drawn to a casual mention of Bitcoin by a friend. At first, the idea of decentralized digital currency seemed like a curiosity, an intriguing puzzle rather than a pathway to fortune. It wasn't until he started dissecting the code, understanding the underlying game theory that drove the reward mechanism, and realizing the rock-solid nature of the elliptic curve, cryptography, securing the network, that a thrill unlike any he'd known surged through him. He saw beyond the currency, recognizing it as a social experiment of unprecedented scale, a grand experiment in trust and mathematics. With the meager savings from his part-time tutoring, he bought his first Bitcoin in early 2013 at a ridiculously low price. His friends scoffed, calling it playing with virtual money, a Ponzi scheme. Jim didn't argue. He quietly observed the on-chain data, analyzed the distribution of hash power, and used his formidable mathematical modeling skills to predict market behavior. He found that despite the volatile surface, the underlying data and long-term trends adhered to a calculable pattern. In 2017, as Bitcoin's price skyrocketed, Jim earned his first significant fortune from his early investments. But he didn't stop there. The success only whetted his appetite for deeper waters. He turned his attention to Ethereum, while others debated the merits of POW versus POs. He was already dissecting Ethereum's EVM and the Turing completeness of its smart contracts. He meticulously analyzed the mathematical models of DeFi protocols, especially the liquidity pool mechanisms in lending and automated market makers. He was astounded that such financial innovations were driven by such pure mathematical principles. This wasn't just about making money for Jim, it was about understanding the elegant dance of mathematics and code that underpinned this new financial frontier. He began experimenting with providing liquidity in DeFi protocols, engaging in arbitrage, and even designing simple smart contracts to optimize his trading strategies. He never blindly chased trends. He let data and models speak. When market sentiment soared and FOMO spread like wildfire, he calmly calculated his risk exposure. When panic gripped the market and cries of despair echoed, he calmly identified undervalued assets. To those who knew him, Jim was a bit of an enigma. They saw a quiet, unassuming young man who preferred the company of numbers to people. They saw someone who wasn't interested in the latest fashion or the newest gadget. All they knew was that he had a prodigious mind and an uncanny knack for spotting opportunities in the heart of the crypto chaos. As the years went by, Jim transformed from a nerd into a low-key, well-known figure in the crypto world, an invisible millionaire. His success wasn't due to luck, but to his profound understanding of mathematics, his precise insight into code, and his cold analysis of market emotions. He once said, "The volatility of cryptocurrency is just the surface. The underlying mathematical logic is its skeleton. Only by understanding the skeleton can you see the flesh and blood." Today, he still sits before his computer, complex charts and code flickering across the screen. For him, it's not just a game of wealth, it's an endless mathematical challenge. In this digital waltz, Jim, the math genius, is quietly writing his own crypto legend. A legend not of audacious risks or wild speculation, but of quiet calculation and deep understanding. His is a story that whispers in the rustling of algorithms, a testament to the power of intellect in the roaring ballroom of the crypto world.